Good, yes, please be nice. Market wasn't very nice today to some people.
No.
Yep. Hello, Andy.
Hey, Steve. Hey, Scott. Hey, everybody.
For those of you that don't know, Andy and I actually met Dan Merkin, the CEO of Trade Ideas, back in '98, before Trade Ideas was even a
Born.
thought in 2002. Yeah, so we go way back. It's great to always have Andy on board with me. We've got a long history together of desktop sharing and mirrored accounts with people who attach their trades to our account. But anyway, nonetheless, if you're not quite sure really who's talking at you here still, I did drop my bio in the chat window if anybody's interested. So welcome to Trade of the Week, June 27th, getting right into the throngs of summer here. Quick disclaimer, same old. We are content publishers. We are a software as a service company. We're here today to talk about some cool technology, maybe look at a few ideas in the markets, and show off some new features that Trade Ideas has coming down the pike. So please don't consider this to be a webinar of financial solicitation. If you're looking for financial advice and financial planning, you got to go to the brokers and the RIA guys that studied long and hard about fiduciary responsibility and collecting fees. So you're not alone with Trade Ideas. We just love to remind people the reason for our recent parabolic growth is the onboarding. Not only is our product, very comprehensive, it takes a little bit of a learning curve to get going, and these are some of the ways we get people up to speed. On the right, the live trading room is free. It's open to everybody, whether you're a subscriber or not. And you can watch Barry Anderson in real time demonstrate trading his account using Trade Ideas technology, as well as a really nice community in there of some good traders that really enjoy the room. It's a no-nonsense room. Barry keeps a pretty tight lid on it and keeps everybody focused. Hundreds of people in there every day. If you need to join the room, give us an email and we'll send you a link. The 4 webinars a week, including this one, we pretty much simplified it Monday through Thursday, 5 p.m. Eastern. Yesterday, Jamie took the helm and I helped him run shotgun. Today, I'll be taking the trade of the week theme, which we'll talk about. And Andy's sidekick tomorrow is Dan, the CEO, and Brad, Director of Operations, talking about what's coming down the pike, new versions, different ways to look at the program. And then Thursday, it's Andy's day, where he puts together some of his thoughts, and Jamie rides shotgun. So 4 webinars. Friday support session was recently added. We've done 4 Friday support sessions, and we've got nothing but just great feedback from people who have the ability to pull up a chair and have access to us in the format that you're in right now. It's basically a go-to meeting, a go-to webinar where you can ask questions in the questions panel, and we can demonstrate things for you in real time. So another good way to get you a good running start, because the one-on-one sessions, which actually is not on here, and another part of our onboarding, one-on-one sessions are a great way for us to share desktops just with you individually and find out what your needs are and your way of wanting to go forward. And we give you a nice 1-hour session to get you going in the direction you're looking for, answer all your questions, and even share some of our scans with you. So all of that, including the trading room, including the Friday support sessions. Yes, we will be recording this webinar. This webinar, Alex, is going to be geared towards some day trading, some swing trading. It just kind of goes back and forth. Hopefully you can get something out of it. Next slide does need to be updated. We're somewhere up here in the corner now, but just another visual of our parabolic growth, and we're very excited to see the retail establishment embrace our technology as they have. This slide is not for beginners. It's for intermediate to advanced users. If you're an IB Interactive Brokers client and you also have Trade Ideas Premium, you can participate in our beta right now of Brokerage Plus, which is basically auto trading any of your alerts that you come up with. Common question is, oh, well, can I just trade the Holly alerts? No, that's proprietary, and we've got some local hedge funds working in first position on that. But the Brokerage Plus, again, is not for newbies. You really need to learn the ropes of trading, learn how the strategies work, know what you're looking for before you plug it into an automated robot to trade. But if you want more information on that, it's still in beta, tradeIdeas.com/beta. You can get more information on the Brokerage Plus with Interactive Brokers. All right. Today's agenda, very similar to usual, but with a couple of little twists. Market recap, I've got some interesting things to say, and I'm sure Andy does too, about what happened in the market today. Holly recap and observations, pretty quiet day. It's going to be a noisy day, and noisy days are typically kind of quiet on the AI. I'll explain what I mean by noisy. Trade of the week management. We're going to go back, to the last 3 trades of the week. This week's Crocs, last week's ASPS and X. I've got some thoughts on maybe how to adjust the risk management based on what we're going to look at here in the market commentary. A couple of new features coming down the pike, and I think you guys are going to like some of this stuff. And please, we don't do this to tease you. We do this to get you guys excited about what's coming down the pike, but we first have to beta test these in development mode so as there's no bugs that reach the beta test by the time it gets to you guys. But what you see on my screen today, we're really hoping can be in your guys' hand, within the next 7 to 14 days as the new beta release comes out. And I'll show you some of those features.
Oh, and you're going to dig it too.
Again, we're not trying to tease you. We're just trying to get you excited about what's coming and where our focus is going forward. Sector check is kind of a new thing that we did, and I'm going to do it again this week. We're just going to quickly take a look at some charts on sectors, considering the breakdown that we had, some of the damage that was done in the market today. Let's maybe try and get a head start on what sectors might still be holding up okay. And time permitting, usually we might have 5 minutes or so at the very end for some basic features or even a chart request. But I'll tell you what, this basic features and chart request really is geared more towards the Friday sessions, if you guys show up to the Friday sessions. So we'll turn that off, we'll minimize that, and we will go right into this. Go ahead.
No, I just want to say while you're diving into that, I want to expound more on Alex's question, because I'm not sure if he was referring to the webinar itself or the software. And he had a question on whether it was geared toward day trading or longer term trading. And it's both. I mean, honestly, we were all, Steve and I helped actually develop some of the patterns, because we were, like I said, friends with Dan from 20 years ago. And but anyway, yeah, exactly. So but anyway, we you can develop. There's so many different filters now and alerts that you can create pretty much a top list or an alert window for any type of strategy you want to to use in the marketplace. So it's definitely can be used for any time frame that you want.
Yes, especially, real quick, this squeeze 52, this is a great swing trading alert. Is blank today because the market was down today. The filter on this one requires that the S&Ps be positive on the day. And so when you have a market filter that requires the S&P to be positive for stocks breaking out of 52-week highs with high short float, and one of the filters says the market has to be up, well, you get a gray box like that, because today, let's just get right into it here. S&P starting with the trend line that we've been identifying for so long, not really that close to it. I'll get to the cues in a second, but what I did say yesterday in the webinar with Jamie was this orange line, if we get some weakness, this is probably going to be the downside target, looking for support for buyers to step in. Why do I say that? Well, because it was resistance back here and here, it was support right here, and there was even a little bit of a gap that came back and filled. But here's what I want to show you guys now. These new gradients, these are based on the current price. So if the spider's current price is the bottom of this candle, what the algorithms and the Trade Ideas technology behind the scenes is doing is looking for plot points, support resistance points, to show you where the risk and reward should be. And as I go through some of these charts, it's pretty impressive and amazing how these gradients are pretty much lining up right to the critical levels that I'm going to be talking about, starting with this one right here. So here you can see Trade Ideas, the bottom end of this color gradient, has identified this as a stop level if you were essentially to try and go long here. This is the technology saying you probably want to cut it if it gets below here. And that agrees with my eyeballs and Andy's eyeballs as well, based on that line that was already in there. We've got a trend line that's been held intact. Now, big red bar, closing on lows. We haven't seen it too often, but let's look at back when we have seen it. Here we saw it. Look what happened the next day. Bounce, buyers right back in. Here we saw it. Next day, gap up, bounce. Here we saw it. A little bit of follow through and then kind of bounce back up for a few days. So one day is what I'm trying to say. One day of a red hot candle poker closing on lows does not a bear market make. It's definitely a major caution flag was thrown up today, especially in the Qs when we get to that in a second. But just going back in history, this has been a very resilient market that loves to rebound. So I know the bears are probably really licking their chops, but you know, is it going to be another example of loosely holding the football here for Charlie Brown to come run and kick and miss? We don't know. We're going to have to find a few more days and see how it pans out. But definitely imprint on this new technology here on the gradient of the chart showing risk reward. So if I go to the Qs, yuck. Look at the Qs. This is the trend line that I've been talking about yesterday and last week and for a while now. This is a very significant trend line until today. We finally closed below. At one point we wicked below and tried to trade back above, and that would have been a nice stick save. But no, we traded below the trend line, and for the first time in a long time, look at that. We have closed below the trend line. Now, one thing that you cannot see on here yet, I will add, moving averages are coming to our charts, but this trend line pretty much lines up directly with where the 50-day moving average is. So not only do we have a solid trend line of price action, we've also got a 50-day moving average. If you guys want to look that up on your own charts, you'll see what I'm talking about. So that was a very significant level that was broken, this trend line here. Now, again, back to the Trade Ideas technology, the gradients on the chart, perfect spot. That's exactly where I would put that. Why? Look back here, that was prior resistance, that became support, and there's even a little gap down here that is really yet to be filled. So there's a lot going on that really shows the bottom edge of this color gradient to be probably a good drop dead spot that we don't want to lose. If we close back below this level, then we might start talking about correction type market. Yes, it is assuming long. The question is, are these gradients assuming long? Yes, they are assuming long, but they're still giving us good points of reference to help, especially new traders who look at a chart and it just looks like, you know, a giant mess. And these gradients are going to really start to try and help show certain levels of key interest that the Trade Ideas technology is coming up with. And yes, you're also right. You could be seeing a REMI. You could be seeing a Head and Shoulders. Let me just take it one step further. And I don't know if we're there yet, but typically, and Andy can expand on this if I don't, you know, define it properly, when markets get into the euphoric stage, you have a correction. And then you have everybody go, hey, no big deal. It's just a correction. Let's just do what we've been doing for the last 8 years. Buy the dip. Bring it back up. So there's always, and I shouldn't say always, but many times near a top, you'll see a break, and then you'll see a complacent rebound. Pop right back up, and then it starts to get ugly. I want to call your attention to this candle back here. We talked about the incredible downside volume on the first break last month. Well, I want to call your attention again today. We look at the Qs here in my single stock window. Qs did relative volume of 1.94. They did almost double the volume today, which just happens to be a disgustingly long red hot poker candle closing on lows. So we definitely have to pay attention to that. Back to the spiders real quick. They did about 1.5 times their normal volume, but the Qs really is where the damage was done. Big downside candle 2 days in a row, huge volume today, and most importantly, we closed below the trend line and the 50-day moving average. Not a very good looking chart, in my opinion. The IWM, which was holding up pretty decently last week, we finally got, you know, a market today where all 4 of our indexes kind of threw in the towel. I'll go to the diamonds as well. Diamonds had done a really nice job of backing and filling into that gap level and then moving higher. Hang on a second. I got the, give me 1 second, please.
Sound like you got the weed eater man outside.
Murphy's Law, right?
Yeah, the weed eater man.
Yeah, I got the windows open trying to stay cool here in San Diego
Yeah.
with no air conditioner, and there's leaves and shit flying everywhere outside my window. All right, Lawnmower Man, thank you. So I was on the diamonds talking about a really nice gap fill and tried to go higher yesterday, but a complete reversal off of that. And again, let's take a look at our gradients here. Downside is pretty much showing us where the prior resistance was on these 2 wicks that we broke out from. So once again, I cannot wait for you guys to get your hands on these gradient charts, especially newer traders, to start training your mind's eye. No matter what stock you want to type in, you know, you're going to get some sort of a feedback on where the current price is and where the upside and downside risk reward is going to lie. So I'm throwing up a big caution flag here, guys. The Qs got my attention today. Big day, big volume, closing on lows, breaking the trend line. But with that in mind, we've seen it here. We've seen it here. We've seen it before. So we saw it here too, right here too. Let's give it another day and see what happens. Not quite sure where we go from here, but spiders probably are on a foregone conclusion to come down and at least test this level, this orange level. I'm thinking probably some follow through tomorrow. And, you know, again, all 4 indices, as I had said previously, it was just the Qs one day, but the IWM remained strong, or maybe the diamonds remained strong. They were showing some strength, but yeah, not anymore. Everything's looking a little dicey. So let's keep the caution flag up, and I'm going to kind of translate this into when I get to the trade of the week. Trade of the week, actually, when we look at the 3 last ones we've got, I think we can make some adjustments on our stops based on the fact that the market's throwing up some fits and rages here, and the gradient lines are also showing some interesting levels of where we might be able to move up a trailing stop when we get to that point. So a lot of changes have happened in the last week, I believe. Q's the most notable with that breakdown, technical close below the trend line on big volume. Anything you want to add in the bigger picture here, Andy?
No, I agree with you, and all eyes are on the Qs as far as I'm concerned, because when you do get into an extremely overbought market, and you can say what you want, to me it's been overbought for, you know, what seems to be years, and a lot of times the first kink in the armor will come into the tech sector, because those are the ones that are most overbought on a PE ratio, so I think you got to focus on that, because that's a lot of times where you'll see the big money coming out of first, because they're risky, and if they do get overvalued, a lot of the smart money, quote unquote, I don't know if there is any smart money left, but because now just everybody just piles in and makes a killing. But anyway, what I'm starting to see here, and I've been saying this for weeks now, that real big red bar down, that huge volume was probably, I think that day was 4 times normal at least, and now you're seeing another day with almost 2 times normal volume breaking a trend line. So yes, definitely cautious flags waving.
Let's not forget what pulled the market up with leadership forever was technology. So let's give it another day or two, but if this continues, guys, we got a short week next week. Monday's a half-day trading, Tuesday's an actual holiday, so we're not going to have the Trade of the Week webinar next week. If we go into the weekend with broken markets and a lot of red candles, you know, don't be surprised if you see cash is a position for the following week. One thing that we're not going to do is force trades to go long in a market that is not conducive to going long. So, you know, it's only Tuesday. We'll see what happens. All right. Enough of that for the bigger picture. Holly had an interesting day today. Definitely a noisy day. If I look at the SPY, noisy like my Lawnmower Man. We had a gap down. We traded back up with a nice little green bar, and then we just rolled over for the remainder of the day. You know, if I sort here on my Holly trades by the time of the day, interesting. Look at the first 30 minutes of the day. First two trades that came out right about here were shorts. And then we had three longs come out as the market shot back up. And then we had a short again. And then we had some longs. So it was kind of a noisy day. What's not a noisy day? A non-noisy day would be a broad-based rally or a broad-based sell-off where the AI has basically picked a direction and had a directional bias. So there was really no directional bias today. It didn't last very long. And it's probably one of the reasons why risk off did the better of the two today. Risk on was flat, basically holding stocks till the close. Risk off means exiting at the same time that Holly exits. And so that did generate a little bit of profit today, getting in, getting out, quick hits. But you can see the majority of the trades were long, and the market noise was pretty intense as we got towards the close. Typically, this market has seen the 330 buyer come in and prop this market up. We did not see a buyer come in and prop this market up today. So we'll see what goes from there. On an individual basis, one of the things I thought was really interesting, and it's a great example of marrying up what's happening in the general market versus what Holly's doing. So from 1132, well, which is 332, all the way into 303, there was really no trades, but at 303 we had one power hour short come out, and that's just like it sounds. Power hour being the final hour of the day and short being the direction. Well, here's the trade, and it was definitely breaking down. My crosshairs back on. It was definitely breaking down through the daily charts support. But what's interesting to note is that a lot of these short selling trades that jump on the momentum side, for those of you that are regulars, you heard me talk last week with Andy, a lot of times those short side momentum trades are not working. The bounce up and fade into a short positions seem to be working better. So this is one of the first observations I've seen where piling onto the short side for momentum to the downside has actually worked. And one of the reasons it worked is because you got to keep an eye on what the general market's doing. I guarantee you if that 330 buyer had popped into the market here at the end of the day, this particular short would not have looked as well as it did. So it was following the market in general. So it's always a great idea to keep an eye on what's going on in the general backdrop of the market. Did you want to say something?
No, I agree with you. I mean, do I need to add? You want me to talk about any more Holly trades, or is that what you're asking?
I mean, I think I
I'd look through them, and there's a couple more that I could, chat about. But I think in general, it was a very difficult day, especially with the market going back to highs and then rolling over, made it tough, I think, for a lot of the Holly shorts. She did have a couple of entered early that, unfortunately, the stocks just followed the market and stopped her out, but they did roll over. But I on days like today, Holly finishes up 65 cents on a terrible day in the market. That's not bad, and I think by far the best trade was that one that you just showed. That was an incredible trade, and once again, it was a time stop. So you got to ask yourself what the market continues to roll over. Maybe you want to stay in that one. Correct, it was a time stop, right?
There was a time stop, but this could be the kind where maybe you cover half at the close and maybe see if the other half can follow through. Real quick question, the version that you're seeing here with the smart stops and the colors, the beta test is not available yet, but I'm really going out on a limb here saying that I'm hoping in the next 7 to 14 days that the new version that's got these types of gradients on there, for instance, we can just pretty much type in anything we want, Microsoft's looking at the closing price and giving us an upside target, which pretty much corresponds to the high of the day, and a downside target here on the daily, which kind of corresponds to some other areas there. So for the first time, we now have input and output on any symbol you want to type in. And I know you guys are excited. I wish this thing could be released tomorrow. Trust me, we're doing everything we can to try and get this beta version released as soon as possible. But I'm hoping within the next 10 days, you guys can get your hands on this, because, as I'll show you, there are a couple other cool things coming up that are in the works, but I'll save that for the right time. Let's go to the trade of the week, because I believe that's where we are. Okay, trade of the week. Now, given what we know about the breakdown in our NASDAQ and our Qs and red flags being thrown up in the diamond spiders, oh my, everything is starting to show a little bit of weakness. If that continues, trades of the week are not going to be immune to that. So let's start by going back a couple weeks. And as you can see, when this trade first came out, I defined what the risk and the reward was for X. And basically it triggered right here. It almost got stopped out here, came back here, almost broke back out here, and just can't bust out of this range. So let's take a look at our handy dandy trade ideas, input output. This level right here, 21.29, may be a level where we just do what we call reduce risk. If you guys recall, Holly has an exit strategy called reduce risk, which basically means, look, even though this is our stop down here, the market's getting a little screwy. Maybe we don't want to risk it all the way down here if the market wants to continue. X has had two chances now to break out above this level and hasn't been able to do it. So for those that might want to reduce their risk, we now have a nice gradient here showing that I would agree, maybe 21.28, 21.29-ish is probably a good level to maybe cut X early if the market continues to go down and we can't get any movement out of that. So that's what I would update X with. Let's move on to ASPS, and this one is rather interesting. This is probably one of the more lower volume liquidity stocks that we've ever called for the trade of the week. And, you know, it's averaging about 122,000 shares. Today it did 201. But that's what I want to show you is look at how the intraday here is kind of bucking the trend. It was not following what the market was doing. And more importantly, one of my favorite metrics to look at in trade ideas technology is when a stock gets up here near its breakout levels, near new highs, near new possible breakouts. What is the 5-minute volume doing? Well, I just so happened to have grabbed a screenshot today towards the close. As the market was heading to lows, I'm looking at ASPS, trade of the week, last week. This thing's doing 1,000% of 5-minute volume as it trying to break out of a key level. And it pretty much closed near this level. So ASPS, you know, is a low volume, kind of a goofy little stock, but today it was showing me something. All right, let's go to the daily chart and let's decide what we might want to do if ASPS does not follow through. Essentially, I believe the smart stop in ASPS, if I recall correctly, is down here, like 2045 or something like that. So once again, we could do the same thing. If the market tomorrow and the rest of the week gets really ugly and ASPS starts to follow suit and the backdrop of the market is just not conducive to anything going up, we might want to go into reduce risk mode as well on here. And I'm thinking, you know, just below the low of these two, which was the, you know, higher low, higher low, higher low. If this thing breaks, this is probably a pretty good level, 21.23. So I'm going to say 21.22-ish could be a good reduced risk level for ASPS. Good question. Why only relative volume of 37? I would like to see more. It was pretty quiet all day, but if you can barely notice, some of the volume bars came in towards the close. So I'd like to see maybe what happens tomorrow. But ASPS, I really would like to see that relative volume kick up a little bit more. It's a good observation you had there. Okay. So that is that. I was very encouraged by what ASPS was trying to do. Keep in mind, this is a big short squeezer. So if we get the right move and the trade does get above, you know, the recent highs and the shorts start to capitulate, what do we have here? We got 64% short the float of only 18 million shares. 18 million shares is nothing. So that was really one of the main reasons this stock was selected for a possible short squeeze. But what we can't predict, What we cannot predict is what's happening in the general market going on. So we've always got to give way to the general backdrop of what's going on and not try to assume that even though we've got a big downdraft here, that just because ASPS had some nice 5-minute volume that it's going to do well. This one is still on watch, and you know, I would agree with where did we go there? Oh, you know what happened earlier? Let's see here. ASPS. Yeah, that 21, 23 area for the most part. Okay. This week's trade of the week, Crocs. Crocs was basically above all of its moving averages, breaking out of a 10-day range scan that I was kind of playing with over the weekend. It's coming off really good earnings. It's had good earnings surprise. Earnings aren't until August, but this is kind of a typical flag formation that was showing up on the daily, and essentially the trigger of that particular trade was right about there, that bottom orange line. And now that we broke through this high, and we even made a new higher high today, but guess what? The downdraft of the market kind of pulled back and brought us back down to reality. So in this case, we could probably get away with a real tight trailing stop if the market is not conducive and if this thing doesn't follow through down here around 734, which basically would be about a 10-cent loss from the entry. So I'm seeing a lot of good value in the new gradients here in identifying possible areas of stop losses. Hugo moving averages are coming. This was the first step. Some other smart stops and moving averages are definitely coming. That is the #1 priority of our development team right now, is getting these moving averages on the charts, because I know you guys have been promised that for a while. So Crocs upside, you know, is basically these levels up here around 9. As I always say, look left and take a look at where the sellers took control last time. So if we do get a good move and Crocs does want to continue higher, that would be our target level. But if the market wants to fall back and get really ugly and fall down lower, we could go into reduced risk mode here, and I'd say 733, 32, somewhere around there could be a nice tight adjusted stop if the market continues to get weak. What if the market continues to get weak and Crocs continues to go to highs? Well, just ride with it. You know, we're playing Crocs, not the market. It's kind of like what ASPS was trying to do at the close today. So anything you want to add on those trade of the week, Sandy?
No, you covered them really well. I mean, I see the potential in all of them, especially that ASPS. It can be very explosive anytime you have a stock only doing, you know, 100,000 shares a day and relative low volume. It's not going to take much to trigger these
and
people.
The
Yeah, the flow very low. Yeah,
18. Yeah,
could get
very
an
low.
explosive move out of that. But at the same time, Steve, you know, when you have it can go in any direction pretty quick.
It can. So you don't want to give it too much comfort. Sell when you can, not when you have to, is a great axiom, which is probably a good rule of thumb for the real estate market right now, in my opinion.
I'm going to answer Frank's question right there real quick. Frank, we don't have futures. We don't pull that data, but we do have ETFs. I mean, so. But if your thing is futures, yeah, we do not pull data for futures yet, for sure.
Yeah, we're gonna touch on these ETFs in a moment here. I've got a couple of ETF scans that I use, and I want to do that to take a look at some of the patterns of different sectors and how they're holding up in this environment. So the next thing I wanted to dial into was a couple of new features, and again, not trying to tease, just trying to get people excited about some new things. Obviously, the gradients are the most exciting new feature that I've seen. Another thing that's interesting is we now have a way to send multiple symbols. Let's say I want to send all of these symbols to a particular watch list, whereas before we had to do it individually. Well, coming up soon, you'll be able to just highlight that whole row, right-click, and if you see, if I go to send to symbol list, wait, hang on a second, let me try that again. Why isn't that working?
For some reason, I mean, we went through this the other day. When you highlight on SHLD,
there it is.
But it's
But
only
look,
going to do one symbol there. But for some reason, yeah, I think it's your Windows 7 or something. It's not letting you grab all the symbols. It's grabbing all the other stuff too. I don't know why, but
okay, well,
is that
and
what
it also
everything is?
it also may be this is the developer's version, and I may have a
Oh,
bug, so I
okay.
may have to report that. So we'll back away from that one for a second. Another new feature that you may have noticed on my screen here is the exit reasons are not only sortable, of course, but they're broken down into the different colorizations. Real quickly, for those that don't know, time stop, this is going to be every single strategy that has a time up here shows you the time stop, whether it's 45 minutes, 60 minutes, 30 minutes, what have you. These particular stocks exited with the shot clock expiring. Only one stock today actually hit its stop. That would have been that one. The rest of these are the reduced risk. This is what I was talking about on the trade of the weeks, whereas they're moving higher, we can kind of reduce our risk if the market, if they've had a chance to follow through and haven't followed through, and the conditions of the general market start to change. You know, it's basically a way of saying, all right, we're just going to cut bait here and just let this one go, and then profit save. That is basically like a trailing stop. So Holly gets in the money and doesn't allow it to go back negative. That's the profit save. So this also is a new feature, some colorization to get you more familiar with what the exit was on the stop. The last new feature I want to show, I want to bring up a couple of top lists here to make an example of something. I'll just bring up one more. You can bring up that one too. Okay. So the top lists, as you're aware, these are T windows, and these are going to show us numerous stocks in kind of spreadsheet form, and they're going to update every 30 seconds. And so every 30 seconds, whether or not the filters are satisfied, we've got things coming and going. But typically we sort, for instance, on Squeeze Me. I'm not sorting Squeeze Me by volume. I'm sorting Squeeze Me by who's got the biggest short float. And if you wind up going through a 52-week high, like Restoration Hardware here, there's the Jets, this could be a giant short squeeze because we've got an 86% value short of 28 million shares in the float. So where I'm going with this is we call it a top list because everything that we want to sort for goes to the top and brings it up to the top. So we're usually most only interested in things that are near the tops of our list. So coming out in hopefully, you know, a soon beta, this is the most recent beta that came out yesterday, is something I think is of value. You know, when the market's quiet, where you're not focused and you just kind of want to kind of sit back and channel surf charts, for lack of a better term. Check this out. I go to new, we got this new thing here called Smart Surfing. So if I click on that, take notice right here, top list, Shield. There's the first one. Boom, 5 seconds later, we're switching to EROS. In another couple seconds, we're going to switch to THC. Now we're going to go to a new top list. I don't know which one it's going to be. Looks like it's one of my sectors. Okay, so what we're doing here is we're just sitting back and we're letting stock charts come to us in real time that we already have configured on our own top lists. There's, let's see what comes up next here. If I can, YRD. Okay, so this is going to Holly now. This is going to give me the 3 top Hollies. MEOH. Okay, now where's it going to go? It's going to Squeeze Me. We're going to start with RH. So we just sit back here and look at these charts, and something is interesting. Oh, wait a minute. That's interesting. What was that STMP? Hang on a second. Hold the fort. Let's turn that off. STMP looked interesting. So we'll go back, turn off Smart Stop, go to STMP, and then all of a sudden we can evaluate what we want. So this is going to be, again, down the road in a couple weeks in a new version, but it's called Smart Surfing, and it's only going to pay attention to top lists that we have active, whether they are minimized or whether they are maximized and open in my window. The top 3 of every top list that you have active is just going to cycle through, kind of like a you know, chart surfing, for lack of a better word. All right.
Trading, that's really cool.
Yeah, I think it's going
Yeah.
to be really cool. Yeah,
Mm-hmm.
because it's just a matter of just imprinting on stuff that's
Mm-hmm.
there, and you can just kind of sit back and relax. And so, all right. I think we're caught up on questions. Let's go in. What do you recommend setting the trend change lubricant factor by? What do you recommend sorting? Very good question, Nathan. I'm always sorting it by short float. And I have, if you'll notice, the float column right next to it. So the short column right next to the float column, I want to see a very low count. Anything under 20 million shares would be great. Anything over a short float percentage of 20 would be nice too. So you can see 20.48 is my bottom level filter here. So you got to have at least 20% short or higher. So when I double click, it brings to the top the stuff that has the biggest short float, and then I can quickly look to the left, and these are some nice values too. Anything under 20 or under 30 is considered pretty good short float. So that's what I recommend shorting that particular top list by. Now it's a good segue to go into this top list, which is my sector ETF top list. I don't really care about volume. Just today, semiconductors got annihilated, down 2.7%, but if I sort by volume, it doesn't really tell me the whole picture. Yeah, they had a lot of volume, but the way in which I use this sector is to sort by change from yesterday's close, and this gives me a helicopter view of where the strength is. Not much strength today, but XLF financials tried to hold up, but semiconductors and biotechs really had a rough going. So in this particular case, I'm sorting by change from the close. So let's quickly go through this exercise and see if we can identify on our daily charts a couple of charts that might be holding up in the midst of this downdraft that we just had. You know, XLF had a nice move last week, but did pull back with the market. And take a look at here, the gradients of the XLF pretty much lines up right with where I would probably cut XLF if I was long right here. Not really seeing much there, kind of in the middle of no man's land. So we'll go through these kind of quickly. KBE banks, very similar to what the XLF looks like. Silver. Well, the silver and golds are tough because they gap up and down every night. There's just not much to do but get kind of a general flavor as to where they're going. Nice pop off of lows here, but nothing to write home about today. Now, oil, on the other hand, this was a new fresh low down here, and it basically reversed off of that new fresh low that we recently had, and oil's bouncing back up. So, you know, there could be some more bounce in oil, maybe back up to these levels, possible. We'll have to keep an eye on that. Don, to answer your question, would the open be better than the close? No, I'd rather focus on the close. I just want to know what percentages are. I've always been,
But it is a matter of preference. I know some people that do like it, a percentage of the open.
Yeah. Could I please share? I'll share the trend change lubricant before I forget, because sometimes if I get towards the end, I forget. So I'm popping this into the chat window right now, dropping the cloud code. And there's the cloud code for the trend change lubricant into the chat window. Moving on, USO, it could be in for a dead cat bounce. Again, banks, not looking that great. Steel, well, as you can tell, I've got an alert here. This blue line is now the new color for price alerts. So I'm essentially waiting for SLX to trigger, and if it does, I'll be ready. So still in no man's land basically on that one. Gold, same as silver, just a lot of gaps up and down, nothing really to take away from there. XRT, if we do our cheat sheet, that's retail. Big bounce off of lows, but a big topping wick here, right into congestion, not really seeing a whole lot there. Haven't really seen any five-star setups yet in any of these charts. UNG gaps up and gaps down a lot, but it's looking kind of similar to oil. You know, maybe if it gets above that level, it could get interesting. I don't want to get too fundamental, but you know, the president's talking about more domestic natural gas extraction and things like that. Maybe that's the reason for the pop. I don't know. Diamonds we've looked at. Would have liked to have seen them build off of that, but they rolled back over and took out that low. Not exactly what you want to see. Energy couldn't get out of its own way today. Still in a bad downtrend. The agricultures were looking good the other day, but big red candle participated along with the market. And let's just take a look here. We see some nice congestion at that level. Once again, the smart stop, I think, showing some nice, decent escape levels. XHB was a real champion last week, but it has now pulled back. However, it still is kind of in a trend line. It's not as ugly as some of the other indexes. May want to keep an eye on that one, but it's pulling back in no man's land and had a real rough red candle today. We got to see how that plays out. Now, solar, I think we all agree, got a little bit of a boost from a certain president talking about building a wall with some solar panels on it. I think that was kind of the catalyst for moving that higher. But we've had 3 really nice big days of solar. Maybe, and just maybe, what we do here is we look at this smart stop and create a pullback alert. I'm going to do that right now. I'm going to do smart stop, create a pullback alert to go long. I'm going to type it solar pullback, watch for bidders to make sure that that level is held if it does trade back to that level. Nice breakout, but you're too late if you bought it here. But maybe we can start to see some decent pullbacks using those smart stops. Okay. Gold miners, nothing really to see there, kind of a weak close. Spiders, we've got that. IWM, we've seen that. FXI China is another overnight market with a lot of gaps, nothing to see there. Transportations, the transports tried to break out and they failed. Not exactly what the Dow theorists want to see, so back in no man's land for that. Treasuries had been all the rage, but also pulled back with stocks today. That's rather curious. Healthcare was very strong. Let's do the same thing we did with healthcare. Look at this. It's the top of that wick. Going back, I don't see any other reason, but I'm going to use that smart stop gradient for a possible pullback alert. See how these start to work. Pullback alert. Watch for bidders. I always say that when it's a pullback alert to make sure that somebody steps in and tries to support that. Oil service just looks like it wants to continue its downtrend. Gold miners, horrible green candle along with the market today. Commercial real estate, really nice breakout yesterday, and look at what one day did to it. Right back into the range. That's pretty scary. That's a major, major reversal. Bottom line down here, that could be one to watch. I'll just keep an eye on that one, on that level. And we're getting close to the bottom here. We're starting to run out of ideas. There's your NASDAQ, technology. NASDAQ again, technology, SMH, technology, and the biotechs got absolutely destroyed again today after a really nice run up. And they're very close to their smart stop as well, almost too close to even put in a pullback. So I don't know about you, Andy, but I really didn't see anything of any value that looked decent in terms of the daily chart of our sectors.
Nope.
So that even makes me raise the caution flag a little bit more about where we go from here. We're going to maybe need a little bit of time to digest what has happened in this market.
I think so. Somebody's wanting your, Arjun is wanting your sector.
Okay.
Yeah.
I can drop that in there for you as well. You're going to need to create a watch list. I'll go ahead and drop the watch list in here too. So there's the sector. All right. Now the way in which we get to the actual symbols in the ETFs, we have to go up to our symbol list. And my ETF list has 28 names. I'll just go ahead and drop those names in there. What I suggest you do, Arhan, is copy these and throw them into a Word doc or a spreadsheet or something so you've got a permanent list of those. So I'll drop those in the chat window as well. All right. I've got anything you want to add for today's session, Mr. Andy?
No. I think you did a great job. I think be careful because, you know, if the dynamics are changing, many traders that are trading the markets today have only ever traded a bull market. Bear markets are totally different. And sometimes it may be 2 or 3 months before you realize we're in a bear market. But that doesn't mean the price action can't start months before. So just if you're finding things difficult, just back away, limit your share size, and trade accordingly.
Yeah, and cash can be a position, and that may very well be the trade of the week next week. We'll see. It's too early to tell yet. I also just did the same thing with these Qs, since they're really kind of the leadership. I'm using the bottom end of this smart stop here, and I put in a price alert, so I'll know if the price alert goes off that the Qs, the leadership of this market, is now threatening a pretty good technical level. So I promise we will, behind the scenes, continue to try and push to get this new beta version out as soon as possible. I know people are itching to get their hands on it. I'm loving it, and hopefully shouldn't be too much longer. So with that said, let me pull the slides back up and bring Scott in to talk a little bit about a few of the upcoming events and how to use a promo code to save some money on your first month.
Yeah.
Scott.
Thanks, Steve. Yeah, we have a podcast, and we release new episodes every Friday. It's been going strong, and we've seen some really good growth. We'd like for you to also become a subscriber. Podcasts are a great way to absorb information. You can just listen to them while you're driving or doing your gardening or walking around. And we release ours on Friday around the close or within an hour or two after. And you can find it by searching for Trade Ideas Podcast in your favorite podcast app, whether that's the player in your iOS on your iPhone or your Android device. You might have Stitcher or Overcast installed as a third-party app. Just search for Trade Ideas Podcast. Find us, add us. Listen to some of the archived ones from the last few weeks, and listen to the new one that comes out on Friday afternoon. I'm going to have a guest this Friday that should be quite interesting. He's a young phenom. He's a 19-year-old that recently turned very small investment into I forget what it was, but 5 figures or something in a very short amount of time, and he's pretty inspirational, so it should be an interesting conversation. We also have a promo code for you. Sunny is good this month for 15% off your first month or year of Trade Ideas Premium or Standard. As the month's coming to an end, that code will cycle out, so use it while it's still good. Trade Ideas Standard and Premium both include a full hour of one-on-one training with Steve or Andy or Jamie. So when you become a subscriber, the first thing you should do is download the software, install it, and start learning it by going to the training videos and attending the trading room and some webinars. And when you have some questions gathered and you know what you want to cover, go to the support section, click on training, and pick the best time and date available in the calendar with Steve, Jamie, or Andy, and you will get the best onboarding ever. You'll get a full hour of hand-holding, and they'll help you out. It's a great service. Again, use Sunny. You can also download, and the promo code has to be all caps like you see it. It's case sensitive. You can download a handout with this information and some of the other contact information as well. Just go to the handouts panel on your GoToWebinar interface and expand it. Click on the link. Email us your questions at info@trade-ideas.com, and then follow us on social media so you don't miss anything else. Or you can email Steve and Andy directly. Steve is Steve@TradeIdeas, and Andy is Andy at. Steve is Today Trader on Twitter, so he's got some good stuff. Follow him there. And follow us on Facebook, like our page, so that you can get all the updates that we don't normally put on other places, and share that stuff with your friends. Thanks, guys. I'll have the recording up in a couple hours, and you get an email later on with a link on how to find that. See everyone in tomorrow's webinar.
All right. Thanks for showing up. Thanks for the kind words. See you next time.
Bye, guys.
Thanks.